on here? We know that there are certain individuals that can control the market. Yes, Trump does have control. The plunge protection team, the high frequency trading, has the ability to move the market. So does the deep state. They also have the ability to move the market. And we're going to be talking about that in a little bit. But I wanted to start off with cryptocurrencies. And what we're seeing right now is that the central banks, they are making their move to take control of the cryptocurrency market. Now, a lot of people who are not in the cryptocurrency market, I don't care. What's the big deal? Let them take control of it. It makes no difference to me. Well, there's always a reason why they want control. Actually, Ken Rogoff, former IMF chief economist and author of The Curse of Cash, he wants to get rid of cash. He's saying that the government will eventually have to regulate cryptocurrency severely and issue its own digital currency. Now, I do agree with him that the government, because it's in our Constitution, where the government will coin their own currency, issue their own digital currency for the nation. What I disagree with is the central bank taking control of that, because there was a time where the United States was creating its own coin and issuing it to the public. Then the central bank took over, and they've tried many times. Central Bank 1, Central Bank 2, and then the Federal Reserve. And we see the central banks of central banks, the biz. They're out there, and they're saying that central banks must be prepared to intervene to stem risks from digital currencies, as Bitcoin has become a combination of a bubble, a Ponzi scheme, and an environmental disaster. I mean, pretty much what the central banks do. They create currency out of thin air. They create bubbles around the world. They put everyone into debt, and they create more and more currency from the banks out of thin air. And it's a Ponzi scheme where they just keep transferring funds all over the place. Really, they're talking about themselves. And they don't want another system going up against their system. The difference is the cryptocurrencies, the currency is created without interest attached. And what they're saying right now, they're saying that they should have the public authorities move to crack down on digital currencies because they are concerned that it could undermine the broader financial system. They're saying cryptocurrencies piggyback on the institutional infrastructure that serves the wider financial system, gaining a semblance of legitimacy from their links to it. And what they're saying is they don't want this system to override their system. They're very nervous about this. They don't want another currency going up against their currency. And what they're really saying here is they need to stop it. Now, the name of the game is control. And this is what they're going to be pushing for. So we have two things happening right now. We have the dollar system that we understand today. We understand what it is. We understand how it was created, how they keep it going. That is dying. The petrodollar system is dying. They want to move to a brand new system where they can pretty much get rid of the old debt, start a new system, make everyone believe that it's stable, it's backed, or there's confidence with gold to show people that, and other countries around the world, that everything's okay. Then we have the cryptocurrency system where governments, without the central banks, can basically create their own coin, issue it, and say this is the currency of the country. And this would be a people's currency. This is what the central bankers don't want to happen, because if it does happen this way, we don't need the banking system. We don't need the central bankers. The cryptocurrency is issued without interest. So if we put one coin out there, all we need is one coin back to balance the books. Today, the central bankers issue $1, and we need $1.25 to give back to them. But how do you do that? The 25 cents doesn't exist. The 25 cents represents interest. It doesn't exist. So the central banks create more currency and the governments borrow it. And this game goes on over and over and over and continually puts governments, the people, into debt, and the central bankers take control. This is what the central banking system is all about. And we can see they're trying to make their move right now to control the system because they can see what's happening here. More and more countries are moving away from the dollar. More and more countries are saying, you know something? We don't even need the central bank currency. We can create our own currency, just like Venezuela, and we can use the Petros, which is a cryptocurrency, and we can sell our oil to other countries. And we don't have to go through any banking system. And it's beautiful. And the money is deposited right away. We don't even have to wait. It's fantastic. And this is what they're worried about at this point. Now, looking at the economy is in a huge amount of trouble. Even though the corporate media, the government, the Fed, they're all telling us that things are okay. Parts of the corporate media right now are taking on the idea that the economy is not doing well, and they're pushing that a little bit at this point. But we're looking at another indicator, and this is the December JOLTS report. And this is the favorite labor market indicator of now former Fed Chair Yellen, because now we know there's a new Fed Chair that was just introduced into the system. And we see right now that we're starting to see the exact same signs that we saw back in 2006 going into 2007, where they're saying that job openings, well, they're declining right now. Total hires are declining as well. And both are starting to fall at the same exact time. Where we saw this back in 2006, 2007, this is when everything rolled over and we entered into a scenario where we were in this recession heading towards a Great Depression to a collapse. And this started in 2006, dropped to 2007. When it hit 2008, it came down very quickly. We're at the point right now around 2007, and we're going to start to see this fall off quite a bit, and it's going to head down very, very quickly. And they realize this, they understand that this economy that we're in right now is built on one gigantic illusion. Now, Goldman exposes the wage growth illusion. Now, in a report that they put out there, they said that wage growth is actually not rising at all. Wage growth is slowing. Now, we've been following this for quite a while, and yes, we have seen this before, where the wages are continually declining. They started to decline rapidly after the financial crisis. They never improved, and this is very difficult for the Fed to push the idea of increasing wages. It's very difficult for the Fed to make people go out and purchase goods and help build retail. These are the things they can't control. They can control anything that has to do with borrowing or statistical numbers, of course. So if you need to borrow for an auto loan, no problem. Housing, no problem. They can push these bubbles up. Countries borrowing money, no problem. They can push those bubbles up. The government borrowing money, no problem. They can do everything like that has to do with borrowing, because that's what they're all about, putting people into debt. The thing that they can't do is they can't make people make more money, and they can't make people get better jobs. They can't make people go out and spend more money in retail. And this is where we see the real economy. They can't make manufacturing produce more. They can't do any of this stuff. And this is where it breaks down. This is where we see the real economy. And what we're seeing right now is wages are declining. We're at the back end of the system. We saw the system rise in the 70s when we came off the gold standard. We had a little bit of debt. And now we're on the back end of the system where we're in a lot of debt. Wages are declining. Back in the 70s, wages increased. There was inflation. They were creating currency. Debt was very low. Now we have a lot of debt. Interest rates have to go to zero or negative, and wages are declining because the system's breaking down. This is what you see, and this is what it looks like on the back end. And they're going to create more and more currency. They're going to push anything they can possibly control up. So housing goes up, auto loans go up, student loans go up. the stock market goes up. These are the things they can control very easily. Now, we had the stock market come down very, very rapidly. Friday it started. It was funny because it came out the same time the FISA memo came out, and all of a sudden the market started to come down. It came down even further on Monday, and then today, all of a sudden, it shot up by 500 something points. Now, people have seen on Friday where the market came down by 666 points, which is 666, and people are relating this to the deep state. Now, the deep state right now can control the markets with the central bank system. Trump has the ability to control the markets, and the deep state, they were showing Trump, and this was a message that was being sent, showing him that look what we can do at a moment's notice. Now, they're not ready to bring down the system as of yet, because we can see that they don't have everything in place. They don't have full control of everything, but they wanted to send this message. Now, S&P is out there, and they're warning that if we remove the easy money punch bowl, this may trigger the next default cycle. And they're finally looking at everything, saying that, yeah, we have major, major problems in the economy. Now, we've been looking at this stuff all along. S&P warns that the extraordinary post-crisis monetary stimulus created a gap between default rates, which remain low, and the number of highly leveraged corporates, which has surged as firms took advantage of easy liquidity. This masked discrepancy between leverage and defaults is so wide that the recent pickup in corporate earnings and financial metrics, especially thanks to tax reforms in the U.S., won't be enough to offset the significant credit risk. When debt is this steep and default rates are low, something's got to give. And they're warning everyone that this is going to happen if we remove the stimulus. And this is what the central bank is preparing to do. They're unwinding. They want to raise rates. But this whole entire system coming down, the mainstream media, the corporate media, the deep state was pushing the idea of panic. Now, they might have wanted this to go further because the corporate media, New York Times was out there saying get used to a volatile market. The mainstream media is pushing a lasting market downturn narrative. We had Carl Icahn. He was out there, and he's a billionaire investor. He was speaking, saying that, a lot of people are going to be paying the price because we're in that 1929 type of situation. And he's saying that the market has become much more dangerous. It's like 2008. And everyone was, out there saying panic, panic. The market's coming down. The market's coming down. And we can see there's a battle right now going on. And we know that to bring the market back up, the plunge protection team needs to get free money from the Fed to feed into the market. Now remember, the central banks, the deep state, they do have control. They can stop the funding of the stock market. Just tell the central banks around the world, stop investing in the FANG stocks, withdraw that money, stop doing it, start to sell off. They can bring this thing down very, very easily. We also know they can control it from the basement of the Fed. We know that Trump also has control. So there is a fight right now to control the market and to keep the narrative of the story. And that's what's happening right now. There is a huge battle going on right now. But what's very interesting is the White House didn't really say that much about the market. And he did say that he is now focusing on the economy's long-term fundamentals instead. Now, yes, he took responsibility for the market because he had control of the market, and he just realized that, and I think those individuals around him that are working with him realized that they also, and I'm talking about the deep state, the central banks, have the ability to shift things, shift the market, shift the entire economic system at a moment's notice. And I do believe this was a message that was sent saying, listen, you stop what you're doing, stop the investigations, stop everything, and we need control once again. Now, is it going to work? Most likely not. Because what we see right now is there's this huge fight between two groups trying to control what is going on here. The deep state, of course, the central banks, they want control back. They want full control back. They don't have full control right now. They have partial control. The Trump administration, those patriots behind them, they have partial control of the economic system, of the country, of those people in government. And the takeaway of all this is that you need to understand there's going to be two different types of collapses depending on who gains the narrative of how the system comes down. Because the system can't go on. It's breaking apart every single day. We're seeing indicators, we're seeing problems all over the place, and we see already the central banks, they're making a call to take control of the cryptocurrency market because, remember, they want their system at the end of the day when the reset hits. So the central banks, the deep state, they don't care how hard they bring it down. Look what they've just done. They just brought it down very, very quickly, made everyone afraid. And this is how fast it can come down. If they gain the control of the narrative, they will bring it down fast and hard. People will not even know what hit them. And this is why I've been telling everyone to get prepared and ready, because this is how quickly it could come down. They don't have to do anything. Boom. One day you wake up, instead of 1,000 points, it's down 10,000 points in a blink of an eye. And guess what happens when it comes down 5,000, 10,000 points? People are going to go crazy. Companies are going to lay off, and they're going to restrict their operations. And you're going to see companies closing plants, companies laying off people, companies saying, we're not going to pay your pensions. We can't. We have no money. And we're going to see this happen. If we get the other narrative, and this is coming from Trump, his administration, the patriots there, it's going to be a little bit softer. They're preparing the country, and they've been trying to do this. And remember, it's only been a year. They have to set everything up for manufacturing. They have to build the infrastructure to support the new manufacturing, because the infrastructure that we have in the country is completely falling apart, and it's not modernized for this new manufacturing. It's not modernized enough for the One Belt, One Road. Everything is not ready for that. And this is what they're trying to do right now. So if we head into this reset, this transition, and the Trump administration, those patriots that are trying to help the country along, not destroy it, it will be a little bit softer. And those people holding hard assets, those people that are holding cryptocurrencies, those people that are holding land and things like that, they'll be a lot better off than those who are just holding dollars, who have their money in the bank, who have their money in the stock market, who have their money, I should say the currency, in other places. Because when the reset, the transition happens, it's not going to be the one-to-one type of ratio where you're going to say, oh, here's my dollar, thank you for the new currency. The old currency is going to be devalued quite a bit. And a lot of people are going to lose out. There's no way around this. Those people who have gold, silver, even cryptocurrencies, land, and things like that, they're going to have real assets. They're going to have the ability to trade that in for the new currency. Now you say, well, why would that be better than having the paper dollar? Well, because everything is going to be repriced under the new currency, and the dollar is just going to lose value because the paper dollar is going to be worth absolutely nothing. Precious metals is going to completely change because with the new currency, the manipulation is going to be gone, and we're going to see gold rise. If we go into a crypto type of currency system, you're going to see the exchange rate for whatever cryptos you have to the new crypto, well, it'll be pretty darn good because it hasn't been manipulated. They're trying to manipulate it, but at this point right now, it isn't manipulated. So you can see right now that they're trying to make it a little bit easier. The central banks, the deep state, they're going to have it come down very hard if they can control the narrative. So the battle continues, but no matter what, you need to be ready for what is coming, because you don't want to wake up the next morning have the banks closed, and yes, they can close very, very quickly. You don't want the market to come down. You don't want to be stuck saying, oh, I should have done that. I should have got the food. I should have had cash on hand. Yes, you're going to need cash on hand in the beginning because people are not going to know what gold, silver, cryptos. They're going to take whatever cash. Even though it's losing value very quickly, you get rid of that very, very fast. Those people who had gold and silver, you'll make out a lot better. And you don't want to wake up, like I said, saying, oh, I wish I've purchased the gold. I wish I purchased the silver. I wish I had some cryptocurrency. I wish I put cash aside, but I left it all in the banks, and now the banks are closed, and they're only allowing people to withdraw $50 a week or $200 a week. And the currency, as inflation hits, is losing value very, very quickly. So if you had to wait a week to get your currency, within that week, say that loaf of bread might go from $6, $7,